Hello, good morning friends. Please come to this wonderful chapter, Advanced Capital Budgeting again. Our topic is normal distribution, use of normal distribution in capital budgeting decision. So in the previous lecture we had a discussion on normal distribution. We'll just revise the last few points again. If Z is positive, point number 12, if Z is positive, it would mean that it falls on the right side of the normal distribution. If negative, it would mean that it falls on the left side of the normal distribution curve. So if your value of Z is positive, it is on the right side. This is positive Z. If it is negative, it means it is on the left side of the mean. If the value falls on the left tail, point number 13, if the value falls on the left tail and we have to find the right of the left tail, that means we have to find the probability of this area. We are going to add 0.5 to the table value, and if the value falls on the right, and if we have to find left of the right tail, this area, then we have to add 0.5 to the table value. Is it right? Next paragraph now. Up to this we have covered. Next paragraph now. Use of normal distribution in capital budgeting. Why we are learning something? We are learning something for some purpose. So use of capital budgeting is that use of normal distribution in capital budgeting is that using this normal distribution we can calculate the probabilities of different possible NPVs. For example, we can calculate what is the probability that NPV will be less than 0, probability that NPV will be more than 0. We can find probability NPV will be more than, let us say, 10,000. We can find probability that NPV will be two numbers, like what is the probability NPV will be between 10,000 and 20,000. Now what is the purpose of knowing the probability? How are you benefited by knowing the probability? If probability of negative NPV is suppose 0.80, it is very high. Probability of negative NPV is very high, and therefore you may not like to start the project. Knowing the probability helps us to understand the risk. Knowing the probability helps us to understand the risk. What is the risk? Risk is that NP will be negative, has a 80% probability, okay, and therefore now according to your ability to take the risk, one may decide to start the project or not, or one may evaluate the project accordingly. If the probability of NPV of 0 or less is considerably low, let us say it is 0.05 only, it implies that risk in the project is very negligible. So in the next few questions I will show you how to calculate the probabilities of different NPVs, and this will help you to understand the risk. So today's topic would be dedicated to normal distribution in capital budgeting. Then there is one Mr. Hillier. Mr. Hillier has given formula to calculate standard deviation of probability distribution. When you are given probability distribution for different years, how to calculate the standard deviation, that formula is given by what is called Hilliard's model. So Hilliard has told you that if we know the standard deviation, we are able to understand the risk better and we can take more informed decision. So there are two formulae only you have to keep in mind here. The formula assumes that there are two formula. One assumption is that cash flows are independent. Cash flows are independent. One assumption is cash flows are independent. What is the meaning of independent cash flow? Cash flow, write down, cash flow of subsequent year or years are not dependent on cash flow of earlier years. That is not influenced by earlier year cash flows, not influenced by earlier year cash flow. Each year cash flow is independent. Each year cash flow is independent. Each year cash flow is independent means it is not affected by, influenced by, or dependent on the cash flow of the earlier years. Is it right? That is independent cash flow. If cash flows are independent, the standard deviation of the probability distribution of NPV, the standard deviation will be equal to under root summation sigma t square upon 1 plus k to the power 2t, 1 plus k to the power 2t. Now what is sigma t? Sigma t is standard deviation of cash flow of each year. Standard deviation of cash flow of each year. You will be given year 1, year 2, year 3, like this, and you will be given cash flow and probabilities. Cash flow and probabilities. You will be given cash flows and probabilities. So what you will do, based on cash flow and probability, you will calculate standard deviation of year 1, you will compute standard deviation of year 2, you will compute standard deviation of year 3, and then apply in this formula. And what is K here? K is your cost of capital or discount rate. And T is the time. T stands for time. This formula will be applied when cash flows are independent. That is, year 2 cash flow is independent of year 1 cash flow. Year 2 cash flow is not affected by or influenced by the year 1 cash flow. Formula I will revise again. Formula we will not be able to derive in the classroom, not required also. Under root summation. Summation means you will calculate this for each year, take the total, then take the square root, summation sigma t square upon 1 plus k to the power 2t. And if the cash flows are dependent cash flow, dependent means cash flow of subsequent year are affected by cash flow of earlier year. Cash flow of subsequent year are affected by cash flow of earlier years. Then they are dependent. Okay, if you start a restaurant business, and first year people praise you, people love your food, you will find in second year also your sale goes up, and if people like your food in second year also, third year also, your sales will go up. So sales of the restaurant business in second year is affected by what happened in the first year. But in a movie theater, first week blockbuster movie, people will come. Second year flop movie, people will not come. So here, in case of a, let's say, a movie business, the cash flow of the second week is not affected by the first week. It will depend on what movie is released in the next week. So that is independent cash flow. The formula for dependent cash flow is sigma equal to under root, not under root, summation sigma t upon 1 plus k to the power t. So you are going to compute sigma t for each year, and then first you compute this for every year, sigma t upon 1 plus k to the power t, take the total, that is the answer. That is to be used when cash flows are dependent cash flow. So what is the benefit of Hillier's model in capital budgeting? Again, the answer is same. It helps us to evaluate the riskiness of the project. If we are comparing two projects, their mean may be equal, their expected NP may be equal, but their standard deviation can be different. So the project which will have lower standard deviation will be preferred. So while comparing two projects X and Y, it is possible expected values are equal, but their standard deviation are different. To compute the standard deviation, I will require Hillier's model, and therefore we can find out which project is less risky and accordingly will be preferred. Using Hillier model, we can also compute the probability of certain NPVs. That I am going to tell you in the question. We can use the Hillier model and find out the probabilities, okay, of certain NPVs. So are we ready for a long journey of question answer? I will use normal distribution in the answer. So please keep normal distribution with you. In our book, normal distribution is at the end of the booklet, so we don't have a worry. Those who don't have normal distribution table will require normal distribution table. No worries, it's very easy. So here we start. Project X NPV has been estimated, and it is learned that it follows normal distribution. Expected amount of NPV is 30 lakh with a standard deviation of 15 lakh. You are required to calculate probabilities that NPV will be 0 or less, greater than 45 lakh, less than 10 lakh. And there is a note, NPV has been estimated and follows normal distribution. Normal distribution means this is normal distribution. The NPV is normally distributed 50% below the mean and 50% above the mean. The NPV of the project is 30 lakh. So mean is 30 lakh and standard deviation is 15 lakh. Question is, what is the probability that NPV will be 0 or less? 0 will be on the left side because it is 30. Number starts from minus infinity to plus infinity. So 0 would be on the left side of the mean. And you have to find the probability of this area, 0 or less. You have to find the probability of this area. probability of this area is your answer. But how do I get the probability of this area? This table, this data first will convert into a standardized format, that is called Z value. After getting Z value, we are going to look into the normal distribution table and find the probability. Normal distribution table, listen to me, normal distribution table will give you probability of this area. The normal distribution table gives the probability of a number between mean and up to that number. But I want probability of this area. We know that probability of the left side of the mean is 0.5. Remove the probability of the number between 0 and mean. The balancing figure is the probability less than 0. Balancing figure will be for probability less than 0. So please write nicely. Now you can write in the notebook. Draw this normal distribution curve. Draw this normal distribution curve. Draw this normal distribution curve. It should look symmetrical. It should look symmetrical. I have drawn, but it's not very symmetrical. It should be symmetrical. It should be symmetrical. Okay. Now, in the center you will draw a straight line indicating mean. This is mean. Below mean you will write mu equal to 30. This is a symbol called mu. Mean. Mu means mean 30 and sigma is 15. And then you will draw this shaded area. X equal to 0. You write there x equal to 0. We want the probability of this area. We want the probability 0 or less. We want the probability 0 or less. First you will compute Z value. First you will compute Z value. Z is equal to x minus mu upon sigma. X minus mu upon sigma. X minus mu upon sigma. X means 0. Mu means 30. Divide by sigma 15. You will get minus 2. You will get minus 2. Now you will come to normal distribution table at the end of the book. At the end of our booklet we have a normal distribution table. Normal distribution table. You will find one normal distribution table like this. Is it right? I'll show you. Can you see this normal distribution table? Okay, so you open this page towards the end of your book and you search for minus 2. Whether it is minus 2 or plus 2, the answer will be same. So search for minus 2. Search for minus 2. Search for minus 2. You will find somewhere in the center. Don't search negative sign, just search 2. Just search 2. How much are you getting? 47128. Can you see 0.47128? Can you see 0.47128? Say yes or no. 0.47128. I hope you are able to search it. 0.47128. Is it right? In front of 2, 0.4 0.47725 is there. So write down corresponding to z is equal to -2, corresponding to z is equal to -2, you will find in the normal table, you will find in the normal distribution table 0.47725. If you are able to locate it, please confirm. It is there in our book. 2.0, just next to that 0.47725. But this 0.47725 is the probability of this area between 30 and 0. I want the probability of this area. So write down probability NPV less than or equal to 0. Probability NPV less than or equal to 0. Total area is 0.5. Remove this part. Remove this part. The balance part is 0.0228 or something approximately. Just check. 0.5 minus 0.47725, 0.02275, 0.02275. So therefore approximately 2.28%, approximately 2.28%, which means the probability of this area is 2.28%, which means you will get a negative NPV. 0 or less than 0 has 2.28% probability. Knowing this, you can take a more informed decision. Knowing this, you can take a more informed decision. Is it right? Next question, write down case 2. Case 2, write down. Second question is probability that NPV will be greater than rupees 45 lakh. Probability that NPV will be greater than rupees 45 lakh. Probability that NPV will be greater than rupees 45 lakh. So I will write here x equal to 45, because in the mean we have 30. The range is minus infinity to plus infinity. A number more than 30 will be on the right side, and we want more than 45. More than 45. We want the probability to be more than 45. So what I'll do, I'll first compute z value. Z will be equal to 45 minus 30, 45, x minus mu upon sigma, x minus mu upon sigma. How much are you away from mean per unit of standard deviation? And the table gives you the probability of that. So this is 1, this is 1. Now you come to normal distribution table. Normal distribution table, in that column x, you will find 1 is written after 10 or 11 lines, and next to that 0.34134 is there. 0.34134 is there. You can write 4 or 5 digits, no problem. So write a note corresponding to z is equal to 1. Corresponding to z equal to 1, probability is 0.3413. Probability is 0.3413. 4 also you can write if you want, doesn't matter. And then write down, this is the probability of this area, 0.34134. But I want probability of this area. Total probability on the right side of the mean is 0.5. Remove 0.34134 and your answer would be something approximately 0.1587. You can also write in percentage, 15.87%, 15.87%. 15.87%. This is the answer of the second part. Now write down case 3. Probability that NPV will be less than 10 lakh. NPV will be less than 10 lakh. NPV will be less than 10 lakh. Draw the table, draw the diagram, not table, draw the diagram. After that you draw Z value, find Z value. Z value is 10 minus 30 upon 15. 10 minus 30 upon 15. Minus 30 upon 15. It comes to minus 1.333. Ignoring negative sign, because the probability is same whether it is on the left side or the right side. So minus sign ignore. Search for the number 1.33 in the normal table. 1.33. So first you come to the first column. You will find 1.3 here, and then in the top columns you go to 0.03 and you find the probability here 1.3. Move right side 4 columns and you will find 0.40824. Okay, so you have to match 1.3 here, 0.3, and you will find this number 0.40824 there, 0.40824. So write down corresponding to Z is equal to minus 1.33. You can write 2 digits in Z value, because my table that I have supplied to you only will help you up to 2 digits after decimal. Doesn't make much difference also. You are calculating probability. You are not launching a rocket to moon. Okay, so you are a businessman. You can deal with expected values, approximate values. You are not a rocket scientist. So 0.40824. That 0.40824 is the probability of this area, but I don't want that. I want probability of this area. I want probability of this area. Therefore, probability that NPV will be less than 10 lakh is 0.5 minus 0.40824. Answer please. Come on, reply fast. Reply fast. What is the answer? 0.09176. 9.18%. If you do not reply, I will assume you are sleeping. Okay. Is the answer 9.18 right? Approximately 9.18% is the probability that NPV will be less than rupees 10 lakh. Is the answer right? So that is my question number 86 for you. Now we'll go to question number 87. Question number 87, initial investment is rupees 200 lakh. Probability distribution of NPV is shown below. NPV can have a probability 0.250, 0.2, 100, 0.10, 350, 0.3, 500, 0.4 is the total telling. 1. Total should be 1. Yes, it is telling. So there are 4 possible NPVs with the given probabilities. Case 1, the firm has specified that maximum coefficient of variation of NPV that it can tolerate is 90%. Advise the firm. First question is simply you have to find coefficient of variation, risk per unit of return, and if it is percentage, multiply by 100. Risk means standard deviation and return means expected NPV. Return means expected NPV here. So for expected NPV I need to multiply these two, and using the same data I will compute the standard deviation, then compute coefficient of variation. If this is less than 90%, project will be accepted. If it is more than 90%, project will be rejected. My tolerance limit is 90%. Case 2, assuming normal distribution, the firm has specified that the probability of negative NPV should not be more than 40%. Negative NPV probability should not be more than 40%. So I will find out what is the probability that NPV is less than 0. I will find out what is the probability that NPV is less than 0. And if the probability is less than 40%, I will accept the project. But if the probability of negative NPV is more than 40%, then I will not accept the project. Okay? So this question requires you to decide on the basis of case 1, coefficient of variation, case 2, normal distribution. So first I need to find out expected NPV and standard deviation of NPV. Please write down calculation of expected NPV and standard deviation. Calculation of expected NPV and standard deviation. In the previous problem, both were directly given. This time you have to compute. 4 columns we will draw. First column write NPV. Second column write probability. Third column x into p. Fourth column p into x minus x bar square. P into x minus x bar square. That is for standard deviation. A very good question. Now write down NPV and probability, copy from the question. NPV and probability, copy from the question. NPV and probability, copy from the question. Multiply the two now. Multiply the two. Take total. Multiply and take total. Please confirm 265 is right. Those who are learning live online, I request you to please reply. Okay. Is the answer 265? Otherwise we will give you recorded lecture and you can read it from that, in case if you are not interested in answering. Okay, now you compute p into x minus x bar square. How do I compute it? I will tell you one. First one, is minus 250, minus 265, this is your x bar, take square into 0.2, take square into 0.2. This will be your first answer. Please check and confirm. Check and confirm. Is it right? 53045 is the answer, right? 53045. Okay, seems to be right. Next try. 100 minus 265 into equal to into 0.10, 2722.5. Next, 350 minus 265 into equal to into 0.3, 2167.5. 500 minus 265 into equal to into 0.4, 22,090, total is 88,025. Please check if it is right. 80,025 is right. 80825. This is not standard deviation, this is sigma square. You have to take the square root of that to get the standard deviation. So write down below standard deviation equal to under root summation p into x minus x bar square, under root summation p into x minus x bar square. So that is under root 80,025, under root 80,025, and that comes to 282.89. That comes to 282.89. That is standard deviation, 282.89. Now write down coefficient of variation. Coefficient of variation. Next calculation, write coefficient of variation is equal to standard deviation upon mean into 100. Standard deviation upon mean into 100. Standard deviation 282.89, mean 265 into 100. That comes to 106.75. 106.75. And what is your tolerance limit? What is your tolerance limit? 90%. You are saying that if coefficient of variation, that is risk as a percentage of return, is 90%, I am going to accept. But here my risk as a percentage of return is more than 90%. Therefore, please suggest me accept or reject. Using coefficient of variation, what is the answer? Everybody, accept or reject, A or R? One student is saying accept, one student is saying reject. What do I do? So the answer is reject. Write down below. It exceeds the tolerance level of 90%. It exceeds the tolerance level of 90%. So the project is not viable. So the project is not viable. If you are applying coefficient of variation for decision making. But this time there is one more question. You have to also check what is the probability of NPV less than 0. And if that is more than 40%, then it will be rejected. But if it is less than 40%, it will be accepted. So for that, you have to now write down next line, calculation of probability that NPV will be less than 0. Calculation of probability that NPV will be less than 0. Okay, draw this normal distribution. In the center write down mu. In the center, right in the center, little in the center, mu equal to 265, mu equal to 265, standard deviation is 282.89, and you require less than 0. You want the probability of this area. We want the probability of this area. Okay. I need to first find out Z value. I need to first find Z value. Z is equal to 0 minus 265 divided by 282.89. Solve yourself and check. 0.93. 0.93. Just confirm, is it right? 0.93. You have to search in normal table. 0.93 or 0.94 is okay. Let us go to normal table. In your book, towards the end of the book, normal table, first this column X is there. Come to 0.9. Come to 0.9 and then you come to 0.03 here. Find out the value for 0.93. You will find something around 0.32381 in that normal distribution table. 0.32381. Just check. 0.32381. Yes, it is right. 0.32381. 0.32381. So write down, corresponding to Z is equal to 0.93. The probability is 0.32381. The probability is 0.32381. Are you able to locate 0.32381? But that is the probability of this area between 0 to 265. I want less than 0. So what will I do? I will write probability NPV less than 0. Probability NPV less than 0 is 0.5 minus 0.32381. 0.5 minus 0.32381. And that is equal to 0.17619. 0.17619. 0.17619. 0.17619. This is my answer, which is equal to 17.619%. 17.619%. Now tell me, what is my tolerance limit for NPV negative? For negative NPV, my tolerance limit is 40%. My question is same. If you apply normal distribution and compute probability, which comes to 17.62%, would you accept the project? Please reply fast. A or R, accept or reject? Accept or reject? Accept the project. Very good. Write down the answer. Note, the probability of negative NPV is 17.619%. The probability of negative NPV is 17.619%. This is less than tolerance level of 40%. This is less than tolerance level of 40%. This is less than tolerance level of 40%. So the project is viable. So the project is viable. So the project is viable. Applying probability of NPV less than 0, we find that it is within our tolerance limit and we will say project is viable. This answer is over. Any query on this question? Any query? Yes or no? No queries. Okay, come to question number 88. Question number 88 was asked originally in November 2002 exam and November 2018 RTP, and now it has become part of your study material also. Your study material also has this same question, which was originally asked in November 2002 exam for 14 marks. So please, I will ask you to mark it. Very important. Mark it, very important. It is an exam question, study material question, RTP question. AS Limited, wow, AS Limited is planning to acquire a light commercial aircraft, wow, at an investment of rupees 50 only. 50. In 50 you will not get a paper aircraft also. Maybe it is 50 crore or 50 lakh or 50 million, I don't know. Just forget it. Focus on the number. The expected cash flow after tax for the next 3 years is as follows. So here we are given probability distribution of 3 years. You are given cash flow after tax probability for 3 years. Similar question we have done in the starting part of this chapter when we are doing risk analysis. First, I need to find out expected CFAT of each year. Okay. The company wishes to take into consideration all possible factors to an airline operation. The company wants to know, the nation wants to know, the company wants to know the expected NPV of this venture. To calculate expected NPV, step number 2 will be to find NPV using this expected cash flow after tax of year 1 to 3. Up to this we have done in earlier questions also. The expected NPV of this venture. Now you doubly underline assuming independent probability distribution. Hillier model we are going to apply in this question, and Hillier model under the assumption of independent cash flow. To compute the standard deviation of the entire project, to compute the standard deviation of the entire project, I need to find out standard deviation under the assumption of independent probability distribution with 6% risk-free rate of interest. So the discount rate is 6%. You have to compute this. Second, you have to compute possible deviation in expected value. Possible deviation in expected value means standard deviation. And third question, theory question, how would standard deviation of present value determination help capital budgeting decision? So what is the role of standard deviation in capital budgeting decision? So this is a theory question which we will answer later. How will standard deviation help in capital budgeting decision? So what will be my course of action now? First I will compute expected CFAT, then NPV, then standard deviation of each year. Then I will compute standard deviation of all 3 years by applying Hillier model. Is it right? So this will be the answer. And question number 5, theory question, already printed in the book. The theory question part is already printed in the book. So please write down step 1. Step 1, write calculation of expected CFAT. Calculation of expected CFAT. Calculation of expected CFAT. Write down year 1, year 2, year 3. Under year 1, 3 columns. Under year 1, 3 columns. CFAT column, probability column, CFAT into probability column, CFAT into probability column. Year 2, CFAT, probability, CFAT into probability, CFAT into probability. Year 3, again same 3 columns, CFAT, probability, CFAT into probability. Now I will solve year 1, and then in the same way you will solve year 2 and year 3. Ready? Question in front of you. Question in front of you. CFAT 14, 18, 25, 40. Question should be in front of you. Point 1, point 2, point 4, point 3. Now multiply these two equal to memory plus, and then later memory recall for total. First one, is it 1.4? Second, 3.6, check. If it is wrong, please inform me. 10, is it 10? Fourth year, fourth cash flow after tax. 12, not fourth year. Please give me the total. Come on, total. Total of year 1. Total of year 1. Total of year 1. One student said 27. Very good. Amazing. Now you try year 2. Try year 2. CFAT, copy from the question. It's printed in the question book. Probability of second year cash flows. Again, please copy from question book. Now you multiply the two. 15 into 0.1 equal to memory plus. 20 into 0.3 equal to memory plus 6. 32 into 0.4 equal to memory plus 12.8. 45 into 0.2, 9. Take the total, 29.3. Very good. Third year, try yourself. I will check the answer after 2 seconds. Sorry, 20 seconds. I will check the answer after 20 seconds. Anybody who would like to contribute the answer of year 3? Year 3 answer, please. Yes, student, year 3 answer, please. Year 3, anyone? 27.9. Very good. 27.9 is right. 27.9 is right. Now write down step 2, expected NPV, right? Expected NPV. expected NPV, year, expected cash flow, present value at 6%, present value at 6%, year 0, 1, 2, 3, expected cash flow 50, expected cash flow 50, year 1 27, year 2 29.3, year 3 27.9. This is from previous table. Now I'll wait for you. In next 30 seconds you have to answer me the NPV. Please try yourself. Those who want to copy will have to wait. Please try. I am asking you to compute the NPV in the last column. Do not wait. Those who are copying will not learn. Take out your notebook and solve. You have to be participant. This is an educational lecture, not entertainment lecture, that you will sit and watch the show like this. Yes, answer please. One student has replied also. Very good. 24.97. You are right. 24.97. Amazing. This is my NPV. 24.97. So first answer is over. What is expected NPV? Second answer, we have to find the possible deviation of NPV. But this question has given you 3 years, 1, 2, 3, and CFAT and probability. So I need to first compute standard deviation of each year. Then I will apply Hillier model, standard deviation of each year. Step number 3, standard deviation of each year. Standard deviation of each year. Again draw the same 3 columns, year 1, year 2, year 3. Under year 1, we will draw 3 columns. This is nothing new for you. We have started our chapter with this calculation only, and we are almost ending with this same calculation. In between you might have learned something, I don't know. Okay, so this is the full circle of the same type of question. So please solve yourself. Please solve yourself. Please solve yourself. Calculation of standard deviation of each year, cash flow, probability, x minus x bar square into probability. Then year 2 cash flow, probability, x minus x bar square into probability. Year 3 cash flow, probability, x minus x bar square into probability. Is it right? Is it right now? First and second column, again please copy from the question book. First and second column, copy from the question book. Cash flow and probability. And then this column, what is x bar? X bar means expected CFAT, which is 27 for year 1. So you will basically x minus 27 square into probability. So take on your calculator 14 minus 27 into equal to into 0.1 16.9. Check. 18 minus 27, next one, 18 minus 27 into equal to into 0.2 16.2. 25 minus 27 into equal to into 0.4 1.6. 40 minus 27 into equal to into 0.3 equal to 50.7. Please tell me the total of this. Be active and give me the total. What is the total here? What is the total here? 85.4. This is sigma square. 85.4 is sigma square. Sigma will be under root 85.4. On your calculator, take 85.4, press square root function. You will get 9.241. You will get 9.241, correct? You will get 9.241. Now please try year 2 yourself. Year 2, first column, cash flow, copy from question, probability, copy from question. Now try the standard deviation yourself. I'll wait for 40 seconds. Deadline is 40 seconds. Once you complete it, please give me the answer. Then I'll go to the next year. Those who are copying, I will again request you, give up that habit. What was the expected CFAT of year 2? 29.3. So x minus 29.3 square into P. This column is x, sorry. This column is x. This is 29.3 square into probability. Total of the year 2, please reply. Total of the year 2, please reply. Total of the year 2. Total of the year 2 is how much? 100 point something. I am getting 98.61. No problem. Take the square root. Take the square root. Is it 9.93 approximately? Is it 9.93 approximately? Please check your calculation again. Check these numbers again. Second year, third year now. Third year, take the cash flow and probability from the question book. Take cash flow and probability from question book. Now I am waiting for you to reply me the total and the standard deviation. Please do it yourself. Do it yourself. I'll check. After 40 seconds, I'll check. 10 seconds for each calculation. Year 3, please reply. Year 3, please reply. Now check the answer. What is the total you got? 74.29 and sigma is 8.619. Sigma is 8.619. In the second year, the average CFAT, mean CFAT was 27.9. If you want to write, you can write that also. It will help you to understand better later when you revise that we are deducting the expected CFAT of year 3. Is it right now? Tell me, is it right now? Can we go to the next calculation now? Yes. Step number 4. This is understand. I will explain and then next. These are the individual years standard deviation and these are sigma square. These are sigma square. Now I have to apply Hillier model where I have to compute the standard deviation of the entire project. So write down step 4, standard deviation about the expected value. This is your second answer. This is your second answer. Standard deviation about the expected value. Under that, write down sigma equal to under root summation sigma t square upon 1 plus k to the power 2t upon 1 plus k to the power 2t upon 1 plus k to the power 2t. This is the formula given by Hillier. It requires some mathematical process to derive the formula, not in the scope of our syllabus. Now please learn how to put the values, that is in our scope. You have computed first year sigma square in the previous table. Go and check 85.4, or you want to write 9.24 square, you can do that also. But when I already have the sigma square figure, why I need to write sigma and then take the square again? It is a duplication of effort. Divide by 1.06 to the power 2t. 2t means 2 into 1 year. 2 into 1, 2. Second year sigma square, previous table 98.61 divided by 1.06 to the power 2 into 2. Then third year sigma square 74.29 divided by 1.06 to the power 2 into 3 to the power 2 into 3. Now you will have to solve it and give me final answer. Let us see who will answer first. I want final answer. If you think you are mathematically strong student, do it on calculator and give me the answer. At this age of your life, you are too old to learn this calculation. Either you know it or you don't know. Solve. 10 seconds more. 10 seconds more, then I'll give you the answer. What is the answer you got? What is the answer did you get? Anybody got the answer? The answer is 14.3696. The correct answer is 14.3696. So this is the answer. So we got both the answers. If you are not getting it, then you have to check your calculation again and you will get this answer finally. Don't worry. Okay. Check it again. If you can't calculate such basic number correctly, that is where you lose marks in the exam. You can't make such mistakes. Okay. Third question was, how does standard deviation help in capital budgeting decision? This answer is printed in the book, so you don't need to copy. this answer is printed, but I'll explain what is written here. First thing they have written that if suppose there are two projects which have expected NPV same but standard deviation are different, then you can select the project with lower standard deviation. Second benefit is, which we have seen today, you can use standard deviation to compute coefficient of variation in case of heterogeneous project. What is heterogeneous? When the expected NPV and standard deviation both are different, then you can compute coefficient of variation and find the relative riskiness of the project and choose the one which has lower relative risk. Is it right? You can use standard deviation for computing coefficient of variation. You can put a tolerance limit for coefficient of variation, and if the project coefficient of variation is less than tolerance limit, you will select the project. Next is, we can use standard deviation, expected NPV and normal distribution, standard deviation, expected NPV and normal distribution to compute the probability of various possible NPVs. That time also you will require standard deviation, and based on the probability of various possible NPVs, you will be able to assess the risk better. So that is the benefit of learning standard deviation in capital budgeting. It helps you to understand the risk better, compare different options, take more informed decision. Now I'll go to question number 89. One more practice. Are you ready for question number 89? Those who are ready will say yes. Those who are not ready will say no. So the student is saying yes, very good. Question is, AS Limited is considering a proposal for the purchase of new machine requiring an outlay of rupees 1500. So year 0, 1500. Its estimate of cash flow distribution for the 3-year life machine is given below. So year 1, year 2, year 3. In this question, good news, expected cash flow is already calculated for you. Say thank you. Say thank you. Actually, this is I have computed and added in the question. Original question did not have this. So you should actually thank me to save your time in drawing one table. Okay. So this will be my cash flow and this is year, and then we have to find present value at 5%. Probability distribution is assumed to be independent. Please underline, because my formula for standard deviation will depend on whether cash flows of year 2 are independent of year 1 or not. Risk-free rate is 5%. So I will use 5% discount rate. Then from the above compute expected NPV. This is my first answer, expected NPV. Standard deviation of probability distribution of NPV, like the previous question number 88. This is same as question number 88. First and second question are same as question number 88, but what they have done this time, they have added few more questions. Find the probability that NP will be 0 or less, more than 0, at least equal to mean. Okay. Then the next question is profitability index. Do you remember the formula of profitability index? Anybody who would like to answer profitability index? Profitability index formula, please reply. Profitability index formula is PV of cash inflow upon PV of cash outflow. And then one more question to test your intelligence. In full public view, today your intelligence will be at a stake. If you can answer this question, you belong to intelligent category of student, and if you can't, then question mark. Is it right? Question mark on intelligence. What is the probability that profitability index will be less than 1? You have to find probability that profitability index will be less than 1. So first answer first. Expected NPV of the project. Expected NPV of the project. 3 columns. Draw 3 columns. Expected NPV of the project, draw 3 columns. First column write year. Second column cash flow. Third column present value at the rate 5%. Present value at the rate 5%. Year 0, 1, 2, 3. Year 0, 1, 2, 3. Cash flow is given 1500. Expected cash flow is already given in the question. Expected cash flow is already given in the question, 420, 630, 840. And then compute the present value at 5%. First year 0, 1500. Take 420 divide by 1.05, 400, 571, 571, 726. I am rounding off the numbers. You can write all digits if you want. Total is 197. Total is 197. Okay. Now if you have any query, you are welcome to ask. Do you have any query? No query means student is understanding or not understanding, which I don't know, but at least we'll move ahead. Step number 2. Standard deviation of each year. Standard deviation of each year. Standard deviation of each year. Step number 2 is standard deviation of each year. Standard deviation of each year. Please solve. First thing first, draw the table. Year 1, cash flow, probability, x minus x bar square. Then the next is year 2 cash flow probability x minus x bar square. Year 3 cash flow probability x minus x bar square. In the first year, your x bar means 420 expected cash flow. In year 2, x bar is 630 expected cash flow, and in year 3 x bar is 840. So if you are interested, you can write that also. Later on, should not forget. Later on we should not forget. Okay, so write down please. Write down please. Okay, now start. Students have drawn the format. First two columns copy from the question book for year 1. Now start calculation. 800 minus 420 into equal to into 0.1 again equal to and memory plus 14400. Next year, try next year 600 minus 420 into equal to into 0.2 equal to memory plus. Learn to use calculator 6480. Come on, next year 400 minus 420 square into 0.4 160. Next year 200 minus 420 square into 0.3 equal to memory plus 14520. 14520. Take the total first. This total is sigma square. Sigma square is 35600 and standard deviation, take the square root, round off. Square root is 189. Square root is 189. Now we'll try year 2. Write down year 2. Year 2, you will do yourself, I will check. I'll wait for few seconds. After you have done, please give me the total. After you have done, please give me the total. After you have done, give me the total. Everybody will try. Those who are learning from home will also try. First on your own, then check with my answer. Then check with my answer. The purpose of taking so much practice in the class is that you should not make mistake in the exam. Okay, you have to practice on your own because this exam is like this only. You may or may not like it, but this kind of calculations are required to be done. Questions have been asked in the exam. Questions have been asked in study material, RTP. 90 is the answer for year 2. Who got it right? 90. Who got it right? 90. Anybody for 90? Now we'll come to year 3. Come to year 3. Cash flow column, probability column. Solve yourself. Third year, solve yourself. Third year, solve yourself. Have you got the answer for third year? What is the answer now? What is the answer for third year? Final answer for third year. Final answer for third year, check. Total comes to 68,400. Please check and confirm. 68,400. And the square root 262. Standard deviation is 262. This is sigma square. This is sigma square. Okay. I will require actually these numbers. If cash flows are dependent, I will require these numbers. If cash flows are independent, I will require sigma square. If cash flows are dependent, then I will require only sigma. So if you are smart student, you are not required to compute sigma if there is independent probability distribution. Okay, but if you have done it, it's okay. Step number 3, where I am going to apply Hillier's model for computing standard deviation of the NPV. Write down step number 3. Step number 3, calculation of standard deviation of NPV. calculation of standard deviation of NPV in bracket Hilliard's model. In bracket Hilliard's model, formula is sigma equal to under root summation. Summation means I have to add all the 3 years. Sigma under root summation sigma t square upon 1 plus k to the power 2t upon 1 plus k to the power 2t upon 1 plus k to the power 2t. I have already computed sigma t square for year 1, 2, 3. So solve under root 35,600 upon 1.05 square plus 8,100 upon 1.05 to the power 2 into 2 upon 68,400 plus 68,400 upon 1.05 to the power 2 into 3. You have to compute each of them first. Take total, take square root. Do I need to teach you all this? Please give me the answer. If you don't reply, we will not proceed further. If you don't reply, we are not going to proceed further. You will also keep waiting. I'll also keep waiting. Anybody answer? Yes, please. Answer. Anyone answer, please? Okay. So the answer is 300. Please note down, the answer is 300. Okay. The standard deviation of the probability distribution of NPV is 300. 300 write down. If you have not got it, check it later. Come to the next question. The next question asks you to compute the probability that NPV will be 0 or less. So for that I have to now apply normal distribution table approach. Write down please. Step number 4, probability that NP will be 0 or less. I need to find the probability of this area. X equal to 0, right here x equal to 0. In the center right, mu is expected NPV 197, standard deviation is 300. Standard deviation is 300. So write down below, right below the graph. First I need to find Z value. First I need to find Z value. Z is equal to 0 minus 197 divided by 300. 0 minus 197 divided by 300 equal to minus 0.66. Minus 0.66. Come to the normal distribution table. First column you will find 0.6 here after 7 lines, 0.6, and then you find 0.06 here, 0.06. Find the number which is equal to 0.66. 0.66. What is that answer? What is that answer? Are you getting 0.24537? You will find 0.24537 written here. 0.24537 written there. Right. But that is not the answer. 0.24537 is the probability of a number between 0 and 197. I want less than 0. Total area on the left side is 0.5. Therefore, probability that NPV will be less than or equal to 0 is 0.5 minus 0.24537. 0.5 minus 0.24537. The answer is 0.25463, 24.463%. So this, you are carrying a risk that your NPV can be negative with 25.46% probability. You can have a negative NPV, but the probability is 25%, approximately 25.463% approximately. Is it right now? Can we go to the next answer? Can we go to the next answer? Now write down step number 5, probability that NP will be more than 0. Probability that NPV will be more than 0. Probability that NPV will be more than 0. Now more than 0 means, draw the diagram. We have mean here 197. We have standard deviation 300. X is 0. We want more than 0. This is the area for which I am trying to find probability. Now student has to be smart. We don't have to do the same thing again and again. The probability of this area in the previous question you have computed is 25.463%. Total area under normal distribution curve is having probability 1. So if from that 1, if I remove 0.25463, remaining is the probability of more than 1, more than 0. Remaining is the probability of more than 0. Yes or no? So why to dig the well again? You have already computed probability less than 0. Balancing figure 1 minus p is the probability more than 0. So write down 100 minus 25.463, that is equal to 74.537%. 74.537%. Right? We have to save time in the exam. Don't again start searching for the same number which you have got it already. Next answer, step number 6, probability that NPV will be at least equal to mean. Probability that NPV will be at least equal to the mean. Equal to the mean or at least equal to the mean means either 197 or more than 197. So I need to find the probability of this area. My dear learned students, what is the answer of this? This is on the screen. The answer is on your face. What is the answer? What is the answer? Don't calculate anything. क्या हुआ? Don't calculate anything. Just read the diagram. Look at the diagram and answer. What is the probability? What is the probability? 0.5 is the right answer. Wonderful. Because I have to find more than mean. Mean is in the center. So more than mean means 50%. Very good answer. Please write probability NPV is greater than or equal to mean. Probability NPV is greater than or equal to mean is 0.5. Is 0.5. NPV greater than or equal to mean is 0.5. Is it right now? One more question was there. What is the profitability index? Step 7. What is the profitability index? What is the profitability index? So please answer my question. What is the profitability index? I am asking you. You are looking at me. Okay. Show your intelligence. You are a final student. What is the profitability index? I have given you the formula also. PV of cash inflow upon PV of cash outflow. What more do you want? Should I appear on your behalf in the exam? Profitability index. Please reply. Just sitting idle at home, having coffee, samosa, dosa, tea. So I require two variables, PV of cash inflow. For that we need to write down first NPV 197. NPV is 197 and cost of the project is 1500. What is the formula for NPV? PV of cash inflow minus cost of project. That is something which is so basic. So if I want PV of cash inflow, NPV plus cost of project will be PV of cash inflow. This is NPV, this is cost of project. So PV of cash inflow will be 1697 and therefore profitability index will be inflow divided by outflow 1.131. This is my answer. Who got it right? Did anyone get it right? 1.131. Okay. Now we'll come to one more question which will test your intelligence. If you can answer this question, you will be joining intelligent group of people. Step number 8, time allowed only 20 seconds because it doesn't require even 20 seconds, but still I will allow. Step number 8, let the world know your intelligence and let you know yourself, your own intelligence. What is the probability that, write down the step 8, what is the probability that profitability index will be less than 1? Quickly reply. Quickly reply. Let the world know your intelligence. One student, no, it's not right answer. He's saying 0. You have to work hard on your intelligence front. Okay. Try to solve some Sudoku puzzles. 0 is not the answer. If it was that easy, then the life was so simple. One more chance, come on, one more chance. One more chance. Other student can also try. Profitability index is less than 1 means what? When will profitability index be less than 1? Profitability index will be less than 1 when PV of inflow is less than PV of outflow. Correct? PV of inflow is less than PV of outflow means NPV is negative. NPV is negative. I have already computed answer of this part. First answer, NPV less than or equal to 0, was something around 25.463%. Whatever is the probability that NPV will be less than 0 will be the probability of profitability index less than 1. If this is 25.463, this is also 25.463. You are asking the same question in a different manner. You are asking the same question. If somebody says what is the probability NPV is less than 0, you will say 25.463%. But if he changes the question and says what is the probability that profitability index will be less than 1, he is asking you the same question. How can your answer change? Write down below. Write down below. It is same as saying NPV will be less than 0. It is same as saying NPV will be less than 0. I have proved it below. Profitability index is less than 1 means PV of inflow is less than PV of outflow, which means NPV is negative. Right. Therefore, probability that profitability index will be less than 1 is equal to probability that NPV will be less than 0, and this we have already computed. Why to dig the wheel again? Okay. Why to reinvent the wheel again? That is the phrase. Why to reinvent the wheel again when it is already done by somebody else? So this is my answer. Your intelligence was tested in full public view and you have understood where do you stand. Okay. In case if you have not got this answer 25.463, you have to work hard on your intelligence front. Question number 90. Source is RTP. And because it's an RTP question from the past exams, past years, it is important. So first we'll read the problem. AS Limited is evaluating a new machinery with a life of 2 years and no salvage value. The machinery will cost rupees 60,000 and future post-tax cash flow depends upon the demand for the company's product. The probability of future cash flow associated with the new machinery is. A similar problem we have done earlier also in decision tree. Do you remember? First year cash flow can be 30,000 or 50,000 with 0.4 and 0.6 probability. Second year cash flow depends on first year cash flow. If it is 30,000, then it can be 20,000, 30,000, 40,000 with these probabilities. These probabilities depend on what happened in the first year. Then if first year cash flow is 50,000, your second year cash flow can be 40, 50 or 60,000 with these probabilities. In the same chapter we have done this type of question 2 times in the class, 1 time it was given as homework. Okay, so finding expected NPV we have already covered in your batch 3 times. First question is also same. What is the mean NPV? Mean NPV means we have to find out expected NPV, and standard deviation of the probability distribution of the possible NPV on the basis of 10% risk-free rate. We have to also find out the standard deviation you have to also find out the standard deviation of the probability distribution. This is new, it was not done in the earlier problem. And after you compute mean and standard deviation, then we can find out if the probability distribution is assumed to be normal, what is the probability for the new machinery to generate net loss instead of profit, which means they are asking you what is the probability that NPV will be less than 0. What is the probability that NPV will be less than 0? What is the probability that NPV will be less than 0? What is the probability that NPV will be less than 0? So for that I have to apply normal distribution table. So how do I solve? First I'll prepare a table where we will learn expected NPV calculation. Are you ready? So write down step number 1. Step number 1, calculation of NPV and standard deviation. Calculation of NPV and standard deviation. Calculation of NPV and standard deviation. Under that we have following columns: year 1, year 2, this is year 2. Under year 1 we have two columns: cash flow, discounted cash flow. Discounted cash flow means present value, and to calculate the present value I will use the factor 0.9091. Then year 2 cash flow, discounted cash flow. Under discounted cash flow I will use second year factor 0.8264. I will add the PV of cash flow of year 1 and year 2. I will get PV of total cash inflows. Then I will deduct cost of project. I will get NPV. But there will be 6 different NPVs because there are 6 combinations possible. 6 paths are possible. So 6 possible NPV. Each NPV will have a joint probability. Multiply NPV into joint probability, you will get expected NPV. And one more column I have added. One more column I have added for computing standard deviation. When I have all the possible NPVs and their probabilities, I will apply the basic formula of standard deviation. When I know these are the NPVs and these are the probabilities, I will apply the formula, normal formula. When you can apply normal formula, use it, x minus x bar square into probability. Is it right? So please now draw the table first. Draw the table first. Column number also write down. Column number will help you to connect different columns. These are column numbers 1, 2, 3, 4, 5, 2 plus 4, 6, 7, 5 minus 6, 8, 9, 7 into 8 and 10. Is it necessary to write column numbers? The answer is no, but if you write it, it is better. Okay. Later on you will not be confused. When you are revising, you should not be confused how this column was calculated. If you are ready with the format, please tell me. Then we can start solving this very important question. Question is taken from past RTP. Past exam question, past RTP question, past MTP questions or study material questions are very, very important. Trust me. So now we are ready. Write down in the first year, In the first year, write down 30,000. Keep 3 lines blank. Keep 3 lines blank and write down 50,000. Keep 3 lines blank and write down 50,000. Then compute the present value. 30,000 into 0.9091. 30,000 into 0.9091. 27273. 50,000 into 0.9091. 45,455. 45,455. Then write down cash flow of year 2. Write down cash flow of year 2. Under that write down 20,000, 30,000, 40,000, and then write down cash flow of year 2 if you get 50,000, 40,000, 50,000, 60,000, 40,000, 50,000, 60,000. Now you have to multiply by a common number 0.8264. So first time what you do, first time when you multiply, take 0.8264, then 20,000, press equal to, also press equal to, you will get 16528. Now you just type 30,000 and you press equal to, you will get the answer. That is the shortcut trick on the calculator. Type 40,000, press equal to 33056. Again copy the same number, don't do anything, same number, same answer. Now you type 50,000, press equal to 41,820. Come on, continue. 60,000, press equal to 49,584. Okay. Please add column number 1 and column number 4. Sorry, not 1 and 4, my mistake. Just a minute. Column number 2 and column number 4. These two numbers you will add. Anybody first answer? This and this you have to add. 43801. Very good. 43801. Next you add this number and this number. 52065. This number and this number. 60329. 60329. This number and this number. 78511. Again this number and this number. 86775. 86775 and this number and this number again. 95039. 95039. Is it right now? Please confirm, is it right? Once you say this is right, we'll go ahead. Is this right? Up to this is right. Okay. Now write down cost of the project, which is 60,000. Cost of the project is to be paid today. So 60,000 is constant. 60,000 is constant. Then my dear students, column number 7 is 5 minus 6. Take the difference of these two columns and write. It can be negative, it can be positive. 16199 16199, 7935, 7935, 329, 329, 18511, 18511, 26775, 26775, 35039. Please check whether this column is right. This column we will call X for standard deviation calculation. Now the student is asking how to compute joint probability. Joint probability is the probability of year 1 multiplied by probability of year 2. So refer your question. First year probability is 0.4, second year is 0.3, 0.4 into 0.3, 0.12, 0.4 into 0.4 now, 0.16, 0.4 into 0.3, 0.12, then 0.6 into 0.4, 0.24, 0.6 into 0.4, 0.24, 0.6 into 0.2, 0.12. For cross check, take the total just to ensure that the sum of the probabilities is equal to 1. This is just for cross check. If you make any calculation mistake and if the total is not 1, you will be able to understand. Is it right? Can we go to the next column now? How do you get the next column? Please multiply NPV and joint probability. I will require a total here. So you are going to multiply column 7 into 8 equal to, use memory plus function also. Use memory plus function to save time in taking totals. Right? Do it yourself and give me the total. Do it yourself and give me the total. I'll wait. Column number 7 into column number 8 figures. Please multiply and also take the total. Let us see who will give me correct answer first. Correct answer, and it should be first. Correct answer and first. Okay, I have got the answer from students now. So please check. Please check the answer. Total is approximately 11900. That is expected NPV. One student has replied 11899. Very good. You are also right. So you can have 11899 or 11900. Whichever number you want to write, you can write. Okay. Because I will suggest you write this number only so that you can match your answer with my answer. This is right, I fully agree, but then every time if you do the standard deviation checking, it may differ from my answer by some number. So you can take that. You can take 11899.32 also. Very good, brilliant. Okay, now important thing is how to compute the standard deviation. X minus, what is X here? This column is X minus 11900 square into probability. x minus 11,900 square into probability. So you will take, now show your skill again, this is minus 16199 minus 16199 minus 11,900 square into 0.12. Anybody who got the answer? Anybody who got the answer? Why don't you reply? Why do you wait for me to ask every time? You can also keep the answer ready. Yes, please. Yes, quickly reply. This is not the way to behave in the class. Who is saying 6744? This is minus 16199. This is minus 11,900. So first you add these two numbers, both are minus. Then take square, then into 0.12. Okay. You will get a number like this, 94746,456. Are you getting that big number, 94746,456? Anybody for this number? Yes, very good. Now try the next one. Try the next one. Second number, 7935 is negative. Minus 11,900 square into probability is 0.16. When both numbers are negative, you have to add them. That was taught in your schools, and I am teaching you again without charging any extra fees for explaining you. When both numbers are negative, you have to add. Okay, please transfer 200 rupees in my account. So this time the answer is 629,48356. Very good. Try the next one. Now it is positive, so take the difference. Now it is positive, so take the difference now, 329 minus this number square into 0.12. Third answer, 16066,565. Just check, is it equal to this amount? 16066,565. Even I am confused. How are you getting such big numbers? So the answer is 16066,565. 0.92. 0.92 you keep with you. Use it. Okay. In your office. We are in the class. Round off the last digit. Next number. Next number. Next number is, take 18511 minus 11,900 square into 0.24. Okay. The answer is 531,03750. 531,03750. 531,03750. Last one. Last one. Take 35039 minus 11,900 into equal to into 0.12. Sajid is right. Go ahead. Go ahead. Complete the other calculations also. And I hope you are using memory plus function. Otherwise you will have to add them. It will take another 2 minutes to add them. Yes, please. So this is 642,49,599, and total, trust me and write down. Total you write down this number, trust me and write. Okay, sometime you have to trust. Otherwise if I ask you to take total, maybe you will take another decade to answer. Okay, so total is 3016040003. You can check it as homework. Check the total as homework. If it is right, confirm right now. Standard deviation equal to square root of this number, and it comes to, please check, just press the square root. This is my standard deviation. This is my standard deviation. Very good. Very good, Pathan. Pathan is replying. Jawan is not replying. So is it 17367? Please note it down. I am going to go to the next discussion now. So my first answer is over. This is expected NPV, this is standard deviation. What is the probability that NPV will be negative? Please write down. Next answer, calculation of probability that NP will be negative. Calculation of probability that NPV will be negative. Calculation of probability that NPV will be negative. Calculation of probability that NP will be negative. So we are here. We need to find the probability of this area less than 0. In the center write mu equal to 11900. Standard deviation write 17367. Standard deviation 17367. First you find Z value. Z is equal to x minus mu upon sigma. X minus mu upon sigma x is 0 minus 11900 upon sigma 17367. You are getting minus 0.68. Minus sign indicates you are on the left side of the mean. Now go to the normal table. Go to the normal distribution table. First column is x. After 6 or 7 lines, you will find 0.6 written there in the first column, and then you move right side on the top. Towards the last second column, 0.08 is written, last second. So you have to match it now. The value you will find there, how much is the value there? 0.25175. Can you see this number? 0.25175 in our table that I have provided to you at the end of the book. Other student who don't have table will have to find the table, normal distribution table. 0.25175, 0.25175, but that is not the answer. The probability you have got is the probability of this area between 0 to mu. The table gives you probability between 0 to mu. Now I am asking you less than 0. Less than 0 will be total probability on the left side of the mean is 0.5 minus this number 0.25175. Therefore the answer is 0.24825. 0.24825. .24825. So this is the answer of this question. Little lengthy question, but we have successfully executed this. Write down percentage also, 24.825%. 24.825%, because sometimes the institute deduct mark for this also. You can't help it. Write both, points also, percentage also. Now we'll take a break for 10 minutes. If you have time, energy, you can try this question during the break time. Otherwise, enjoy idli, sambar, chutney, chai, coffee, tea, coffee, medu vada, rasam, samosa, vada pav, whatever. Okay, we are back. Start now. Question number 91. Question number 91. Everybody is ready now? AS Limited is considering investing in a new product with an expected life of 3 years. It is estimated that if the demand for the product is favorable in the first year, then it is certain to be favorable in the subsequent year, and if it is low in the first year, then it is certain to be low in subsequent year. What is the interpretation of this line? It means cash flows are dependent. Because low demand in one year may lead to low demand in the subsequent year also. Year 2 cash flow is influenced by year 1. So this time we will assume cash flows are dependent. Cost of the project is 50,000. And then you are given cash flows. In order to save time, I have kept this column blank so that the student can complete working note 1 in the book itself. Expected cash flow you can complete in the book itself. Okay, one working note in the book. In the exam, don't complete in the book question paper, write in the notebook. So this is going to be my step 1. Assuming a risk-free rate of 5%, that is your discount rate, calculate the expected value and standard deviation of probability distribution of possible NPV. Now this time there are 3 different years and there are different probabilities for each year cash flow. I will have to apply Hillier model under dependent cash flow assumption. Next is assuming normal distribution. What is the probability that NPV is 0 or less? 15,200 or more. Again we have to apply normal distribution table here. Is the standard deviation calculated larger or smaller? Then it would be under an assumption of independence of cash flows over time. The meaning of this question is, we are going to compute standard deviation by assuming dependent cash flow. Whether this standard deviation is higher or lower if you would have calculated by assuming independent cash flow. Same problem, again solve by assuming independent cash flow, and then you will be able to compare whether standard deviation is higher when cash flows are dependent or when cash flows are independent. Okay, so are you ready? What you do, first complete this table in your book. Only. I am giving you 30 seconds. Complete this table in the book and give me the answer. Complete the table in the book and give me the answer. First year, anybody? First year who would like to reply? First year, would you like to reply? What is your expected cash flow of year 1? What is the expected cash flow of year 1? First year. Come on everybody, first year. I have written only final answer on the screen. You will do yourself and check the total. Is the total 20,000? is the total 20,000. Now try the next year. Please come on, try next year. Next year, what is your expected cash flow? What is your expected cash flow of the next year? Is it 35,000? Is it 35,000? Go to third year. Go to third year. What is the answer for third year? Answer for third year. Answer for third year. Check the answer. Is it 15,000? Is it 15,000? Third year answer 15,000. So please note it down if you have not done it. 20,000, 35,000, 15,000. You just have to multiply and add it. Now write down our step 2. Step 1 in the book only to save time. Step 2 expected NPV. Step 2 expected NPV. Year cash flow present value at the rate 5%. We are solving question number 91, a very important question. This has got dependent and independent cash flow assumption both in the same problem. So please write. Sajid is right. 35, 15, you are right. Very good. Go to step 2, expected NPV. Please respond. Year 0, 1, 2, 3. Cash flows 50,000, 20,000, 35,000, 15,000. Now compute present value. 50,000. 20,000 divided by 1.05. 19047. 19047. 35,000 divided by 1.05, 2 times equal to 31746. 15,000 divided by 1.05, 3 times equal to, 3 times equal to, how much you are getting? 12957. 12957. Take the total. Take the total. Take the total. How much is the total? 13751. Please confirm if it is right. This is your NPV. NPV is 13751. Please check. 13751. Now write down step 3. We need to compute first standard deviation of each year. When each year cash flows are separately given with separate separate probabilities, first you need to find standard deviation of each year. Okay? First you need to find standard deviation of each year. Table. Draw the table. Year 1, 3 columns. Year 1, 3 columns. Cash flow, probability, x minus x bar square into probability. Year 2, 2 columns. Year 2, 2 columns. Sorry, 3 columns. Cash flow, probability, x minus x bar square into probability. Year 3, 3 columns. Cash flow, probability, x minus x bar square into probability. If you want to write, you can also write first year expected cash flow was 20,000. So 20,000 you can write. Second year expected cash flow was 35,000. So you can write 35,000. Third year expected cash flow was 15,000. So you can write 15,000. This will help you to ensure you don't make mistake. Now we are going to compute for year 1 standard deviation. Cash flow copy from the book. Cash flow copy from the book. Probability copy from the book. Probability copy from the book. Come on. Now you will take 0 minus 20,000 into equal to into 0.1. So that will be 4 crore. Very big amount. 4 crore. Try next one. 10,000 minus 20,000 square into 0.2. 2 crore. Third one. 20,000 minus 20,000. It will become 0. Don't require calculator. For third one, don't waste time. For the next year, 30,000 minus 20,000 square into 0.2. 2 crore. 40,000 minus 20,000 square into 0.1. 4 crore. Take the total. Take the total without calculator. 4 plus 2 plus 2 plus 4. 12 crore. This 12 crore you write sigma square. Sigma square is 12 crore. Therefore standard deviation, take the number 12 crore on calculator and press square root function. Press square root function. You will get 10,954. Please check if it is right. Please check if it is right. Anybody who got it right? Go to the second year. Copy the cash flow of the second year from the book. Copy the cash flow of the second year from the book. Copy the probability. Copy the probability. Now I have not written the answer for year 2. You will do yourself and tell me the total. You will do yourself and tell me the total. I have not written the answer for year 2. Year 2 you will solve yourself and give me the total. $5,000 minus 35,000 square into 0.15. 20,000 minus 35,000 square into 0.2. What is the total? What is the total? Check the answer. Total answer 36 crore. Anybody for 36 crore? Anybody for 36 crore? Then write down 18,974 standard deviation. Take the square root. Take the square root, you will get the standard deviation. Now try the third year. Try the third year. Third year final total, tell me. 36 crore is sigma square of the second year. Sigma 2 square. Sigma 2 square means second year variance. Now please try the third year and give me the total. Third year total. Third year total. Answer for third year is 9 crore. Total is 9 crore. Sigma 3 square is 9 crore. Write down. Sigma 3 square is 9 crore. And if you take the square root, it is 9487. It is 9487. It is 9487. Is it right? 9487, third year. So we have done the major calculation. Now some minor calculations are pending. Okay. So please write down below this. Original question assumes dependent cash flow. Later on they want you to solve under independent cash flow. So in this question we are going to apply Hillier model on the assumption that cash flows are dependent. Write down step 4. Write down step 4. Standard deviation of probability distribution. Standard deviation of probability distribution of NPV under the assumption of dependent cash flow. 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 So under that you write down sigma equal to under root, root is not required, summation required, summation sigma t upon 1 plus k to the power t. Summation sigma t upon 1 plus k to the power t. Now you have to go to previous table. These were the standard deviation of year 1, year 2, year 3. These were the standard deviation. Divide by 1.05, divide by 1.05 square, divide by 1.05 to the power 3. Now at least solve this and give me the answer. This you can solve. First solve one by one, then add it, then you will get the answer. Solve this part first. Write the value below. Solve this part now. Write the value below. Solve this part now. Write the value below. And your answer will be 35837. Your answer will be 35837. Your answer is 35837. Now the next question is step 5. Probability that NPV is 0 or less. Probability that NPV is 0 or less. Today we have done this for the 4th or 5th time. Probability that NPV is 0 or less. Draw this normal distribution curve. Draw this normal distribution curve. In the center write down mean, whose symbol is mu, 13751, sigma previous answer 35837, and we want to know the probability of this area, that is it is less than 0. First you will write below the graph, write down z is equal to, z value is 0 minus 13751 divide by 35837. 35837. This comes to minus 0.38. This comes to minus 0.38. Go to the normal distribution table. First column, X column, 4th line you will find 0.3. Go to second last column 0.08 and see what is the number for 0.38. The number for 0.38 is 0.14803. Is it there? 0.14803. Right. For z is equal to minus 0.38, for z is equal to minus 0.38, probability is 0.14803. Probability is 0.14803. But that is not what I want. I have got probability of this area, but I want probability of this shaded portion. So for that I have to deduct 0.14803 from 0.5. So last line write down for this answer, probability NPV is less than or equal to 0. Probability NPV is less than or equal to 0 is 0.5 minus 0.14803 equal to 0.35197. Also write in percentage, 35.197%. 35.197%. This is my answer of probability that NPV is 0 or less. Okay. Any query up to this? One more probability they have asked you. Step 6 write down. Step 6 write probability that NPV will be 15,200 or more. Probability that NP will be 15,200 or more. 15,200 will fall on the right side. Mean is in the center 13751. So 15,200 will fall on the right side. We want the probability of this area. We want the probability of more than 15,200. So I will first find Z value. Write down Z is equal to 15,200 minus 13,751 divided by 35,837 divided by 35,837, and that is equal to 0.04. That is equal to 0.04. Please check, is it 0.04? Is it 0.04? Now go to the normal table. In the X column, first line 0.0 is there, and you search 0.04 here, and you will find one probability written 0.01595. In the normal table, first row 0.04, 0.01595 you will find. Are you able to locate it? Are you able to locate it? Yes. Then write, for Z is equal to 0.04, probability is 0.01595. Probability is 0.01595. Therefore, probability that NPV will be greater than 15,200. Probability that NPV will be greater than 15,200 is equal to 0.5 minus 0.01595 is equal to 0.48405. 0.48405. 0.48405. You can also answer in percentage. 48.405%. 48.405%. 48.405%. So this is the answer of this probability The answer is still not over. They are asking you whether the standard deviation under dependent cash flow is higher or lower than under the assumption of independent cash flow. So I am going to solve again by assuming independent cash flow. Write down the heading, last part of the answer. Standard deviation of probability distribution, standard deviation of probability distribution under the assumption of independent cash flow, under the assumption of independent cash flow, sigma equal to under root summation sigma t square upon 1 plus k to the power 2t, sigma t square upon 1 plus k to the power 2t. We have already done this formula today 2 or 3 times. One more time, under root, go to your standard deviation of each year calculation, standard deviation of each year. In the last line you will find sigma 1 square was 12 crore, divide by 1.05 to the power 2, plus in the second year it was 36 crore, divide by 1.05 to the power 2 into 2. In the third year it was 9 crore, divide by 1.05 to the power 2 into 3, to the power 2 into 3. Now I will ask you to solve. Please solve on your own. Please solve on your own. Don't copy. In the exam, if it is asked, you have to do. So practice now only. Solve one at a time. Then add them. Then take square root. Answer please. Question number 91. I had promised you I will take more than 90 questions. So we have crossed 91 and we are going to take few more questions in the next lecture. Whatever I had told you I have done. Now it is your chance to revise. Anybody answer? Final answer please check. 217 to 9.6. 217 to 9.6. 217 to 9.6. Okay. The question is, whose standard deviation is more? Under dependent assumption or under independent assumption? Under dependent assumption, the standard deviation was 35,837, and under independent assumption it is just not 21729. The answer is standard deviation under independent cash flow assumption is lower than under dependent cash flow assumption, and this is going to happen every time. Write down please a note. This will happen in every problem. You can try the other questions also that we have solved. Under independent cash flow assumption, the risk is less because what happened in past will not affect your future. But if the cash flows are dependent, the risk is more, and that is reflected in the standard deviation also. So please write the standard deviation under the assumption of independent cash flows is lower than under the assumption of dependent cash flows, is lower than under the assumption of dependent cash flow, and this is only tutor's note. It is universal, that is applicable for all questions. The formula is designed in such a manner that every time if you compute standard deviation under dependent cash flow assumption, it will be more than under the assumption of independent cash flow assumption. Is it right? Now I need to tell you one more thing. If the question says probability of NPV greater than, less than or equal to 0, or NPV less than 0, answer will be same. Answer will be same. So whether it is less than 0, less than equal to 0, the answer will be same. Okay. So don't overstretch your imagination. If it is less than 0, less than equal to 0, what is the difference? The difference is very small. Difference is very small. A number 0 and a number less than 0, the difference between these two numbers is very small. I will show you. Suppose this is 0, the next number can be 0. 0.000000000000000001, because next number can be anything. Normal distribution deals with continuous variable. The probability of one individual number, one single number, let us say we have to find probability that NP will be 1, just one number out of infinite possibility. In that case the probability becomes 0. Is it right? So therefore the difference between the probability of NPV less than 0, NPV less than equal to 0, that difference is 0. So answer is going to be same. So don't overstretch. Is it right? Now in query, question number 92, homework. We have done so many questions today. This problem you will solve in the same way like we have done earlier. Okay. Answer is also printed. Answer is also printed. Only you have to solve it 2 times. One for project X, one for project Y. I have given you the answer in the book. So please do it as homework. Okay. So today's lecture is over. Now the next lecture will be on Monday. Thank you very much. See you on Monday. Take care. Bye bye.